Hello, good day. So our lesson for today is cash disbursement journal. This is quite some opposite of our purchase journal. So let's check a look how it become an opposite. So cash disbursement journal. Cash disbursement journal, these are a specialized journal to record all cash flows of the business, or meaning these are all outflow because this pertain to our disbursement. Remember, all our credit disbursement are recorded in purchase journal. Next, by itemizing all cash payments. So this journal also help business organize their outgoing cash records. So take note, if you are not using a cash basis or you are only using a cash basis accounting and not the accrual, you would only have two books, cash disbursement and the cash receipts. But if you are in an accrual accounting, you would be using this four specialized journal, the sales journal, the purchase journal, the cash disbursement, and the cash receipts journal. Okay? So for this one, we focus on our cash disbursement. So manage all cash outflow of the business. This could be payment of cash for cash purchases, because take note, payment for payables or creditors on account are recorded on our purchase journal. But for this one, payment for any payment we made for all the purchases in our purchase journal are recorded in this journal. So these are payment of cash for accounts payable and creditor. It's also payment of cash for various expenses, cash refund for goods returned by the customer, or the refund or the performance bond, payment of cash for donations and charities. Okay? So let's take a look how it look like. So take note, it look like this. It has date, the check payment, because normally in a normal business, they don't usually use money, cash, because it has a less paper trail. Whereas for checks, you'd be able to monitor on which check you'd already issue for the different suppliers. Or nowadays, it's more of electronic payment, because the bank would have the record of all the transaction you paid through bank transfer. You also have list the payee, and then the particular to explain what you're paying for, the purchase invoice or the invoice or the sales invoice, and then the folio in some cases is a post reference or PR, and then your cash, the discount you've availed, the accounts payable you paid, the purchase tax or the input tax if it's abatable purchases. Next, the purchase, the amount of purchase. And then those that are not recorded here could now be recorded on the account, different account. Because take note, we also do payment for our salaries, for other payments that are not only purchases. So you could put it on the other account debited. So if you could see, you could have your own way of arranging the column. So we have now our sample transaction on January 14. Purchase inventory for cash under PR23 with a check number 001 to Huyos Trading for 16,140. Next, we also have on January 20, payment for the credit purchases purchased to Kevin Corporation within the discount period under purchase invoice number 163 15,000 2% at 10 days and no discount if paid in 30 days under check number 02. But take note, it was stated that it was within the discount period. But in the real world, you have to count whether the payment were already really made during the discount period. Next, on January 30, payment of salaries to Mr. A for 5,000 under check number 003. And last, January 31, purchase a mobile under PR24 for 8,000 cash to Silicon Valley for check number 004. So we have now cash disbursement. See? So on January 18, 2020, check number 001, Huyos Trading, purchase cash. So cash purchases, our PR number 023. You could also put invoice. And then you also have the folio or the post referencing. You put your account here when you already post this particular account to our ledger. So we have now our cash because we paid in cash at 16,141. So we don't avail any discount. And it's not a payable because it's a trading. So we have now purchases at 16,141. No tax because we presume this is a non-BAT. But later we would discuss what if Huyos Trading is a vatable entity. Now, we also have paid on January 1, 20, on January 20, 002, we paid check to Kevin our payment to creditor. So take note, if you would also check this, you could also check this on our purchase journal because at the time, we already purchased it as our credit. So we have sales invoice or the PR number, then the cash, we pay in cash. Oops, it's 15,000. Why? It's only 14,700. Take note that we avail discount for this one. It's 2% for when we pay within 10 days. But we have to check it if it's really we pay on 10 days. So we put accounts payable 15,000 so that on our T account it would now be closed. Then we had a cash payment of 14,000 less the 300 for our discount. Okay? Next, on January 30, 2020, we pay in check 003, Mr. A, payment to employee. So we don't have any purchase, but you could also put in here your salary number or the salary vouchers. So we pay in cash 5,000. Oops, it's no purchase. It's not an accounts payable. It's also not a purchase payable. It's not a purchase, but indeed, it's a salaries expense. So we put it our to other account. This other accounts means those are not account that are within the column. See? So that's why we put salaries expense 5,000. Last, on January 31, 2020, we pay check to Silicon Valley, payment for mobile 020 for 8,000. And then it's an office equipment 8,000. But take note, what if we use our credit card to pay? So if we use our credit card, then this one should not be included in this journal. Instead, it should now be recorded in our purchase journal. Okay? Because it's a credit purchases if we use credit cards. Okay? Next. So what if Huyos entity is avatable and Kevin entity is also avatable? So if these two are avatable, the entry would be for Huyos, we would have now cash. We still pay in cash at 16. But take note, our purchases would now be less than by 12%. Why? Because this 12% now become input tax, which we could deduct to our output tax for our sales. So we have now 1,729.39, and then we pay our purchaser 14,411.61. For Kevin, the entry would be the same because take note, this one is also recorded in our purchase journal, wherein we already put our tax purchases. Okay? So to avoid that, the double entry for tax, we could just put in the payables. Okay? And then, the entry would now be, because in our entry, if it's in our purchases, that would now be credit. So we have now debit purchases, less tax, so the amount of tax, and then the tax, the purchase tax payable, and then we credit our accounts payable 15,000. Okay? So next. So here's now how we would record this. So we would now general ledger cash. So we would just have to put or if it's cash in bank because it's check, you could also put it on our subsidiary ledger cash in bank on a particular bank. But for this, since it's only cash and we don't know which bank, we just put it on our general ledger. So this is how we record. But take note, there could be a lot of amounts in there already. This one is only for for you to particularly see how our purchases or how our recording in the cash disbursement journal be posted in our general ledger and subsidiary ledger. See, you also have your payment with discount 300 to our purchase discount account. And then this sheets is now what you are gonna put on your folio or in your post reference. Then we have the input taxes. So we have cash on purchases. So this is, if you would check it on our, and then we also have payable. So suppose there already see it's PJ1, so that you would see that the posting would just be zero out for the accounts payable. Okay? But take note that the credit purchase in PJ1, it's in PJ1 and not in our cash disbursement journal. Okay? So this is for our accounts payable again for general ledger. So we could also have there. I'll just put in so that you could see it better. So we put PJ01 15,000 and then CJ, this is CJ1, this is what we get from our cash disbursement journal so that you would see it just zero out because it's already recorded in our purchase journal. Okay? So we have now salaries expense 5,000, and then office equipment Silicon Valley 8,000. Okay. So do you have any question? If you like this video, please help me reach out more people by hitting the subscribe and the like button below. God bless you all, and hope you learned somewhat in my video.